Hello traders and welcome to a new video on contractmarketcap.com. This is one of the most helpful sites that I have ever found. I know I say that a lot, but this is a site that gives us open interest data, meaning position data on longs and shorts of every single cryptocurrency exchange that offers it. Not only does it do that, but it pulls it together into one open interest indicator so that I and you, the viewer, can see exactly how many longs and shorts there are across every exchange at all times. This amount of data is really unprecedented, because typically you just wouldn't have access to this data for free. But this is a beauty, and I'm here to welcome you to this beauty. Before we do that, I have recently released my 60 scenarios of order flow. If you are curious, want to learn more about order flow, want to sharpen up your skills in order flow, you can click the link in the description below to begin the course. What we're looking at here are all regulated Bitcoin derivatives. And the open interest data from those derivatives pulled together is $131 million. All right, that's a big whoop. Not a lot, only $131 million. Unregulated Bitcoin derivatives, yeah, total open interest of $4.27 billion US dollars. Now we're talking. This is far more. Now, if I click what's the highest open interest, not surprising, XBT USD, but you don't typically get this data. Typically, we only see open interest data on this guy here, but look at all of this. FTX, Binance Futures. Look at this, guys. This shocked me already. I know the exact open interest of all of the Binance Futures assets. This is not commonly going to be given to you guys. I mean, look, I can see exactly how much money is in each. Now, let me take a step back and tell you guys, what is this open interest thing that I am all giddy about? Open interest is going to show you how many futures contracts there are between a long and a short. If we see 100 in open interest, that means there are 100 contracts of longs and 100 contracts of shorts. If 5 longs and 5 shorts both exit their positions, then there are now 95 contracts in open interest. If 10 longs and 10 shorts agree to enter a futures position, now there's 95 to 105 open interest contracts. Okay, so it's really going to show us how many traders are trading, are active. Now, what we're looking at here is the Binance Futures market overview, and we can see exactly how much open interest there was on Binance over time. You can see the decreases, like, oh, what happened here? Pretty large decrease here at around 21 o'clock across all. Okay, That makes me curious. What happened at 21 o'clock? This wasn't even planned as part of my video. It's just my curiosity taking over, and you're here to accompany me in my curiosity. Yeah, there we go. Wha-bam. This is not that surprising. A massive decrease that goes below the low, that's going to decrease open interest immensely. Now, you may be wondering, or you should be wondering, well, Bennett, how can we possibly make money on this? Tell me. I want to make money. Well, listen up, because you're going to get a bit of theory, but if you listen to the theory, you can make the money. Okay, that's not guaranteed, but listen to theory. Typically, when price increases steadily or decreases steadily, you're going to get an increase in open interest. What that means, like I had said before, is that longs and shorts are both adding positions. What this also means, more sadistically, is that more and more traders are betting against the market. If traders were not betting against the market, you would see open interest decreasing, right? You know, shorts are getting out as price is going up, okay, and longs are getting out. You know, you'd see that. But when you see this, that means more and more traders are betting against the market. What does that do? Typically, here's what happens. You get that final euphoric spike of greed in an uptrend, and open interest just tanks. This is because we're flushing out all of the traders who had tried to trade against the trend. Now, you may say, well, how can we step in front of these guys? How can we make money on this? Well, here's what you do. When you see a large decrease in open interest after a large spike in volatility, typically this is the maximum point of opportunity for you to take a reversal trade, because you are able to be one of the only traders still alive who is going to take a reversal trade, if that makes sense. Typically, the leader is who makes the most money. The first buyer in an uptrend, the first seller in a downtrend. These leaders of a trend make the absolute most ROI return on investment possible. You know, that's just basic mathematics. Not mathematics, but basic markets. So if you're able to take advantage of the pain of this, of a lot of, you know, shorts getting killed on a spike like that, and then you're able to short here, you might just be pleasant to see this. All right, with that, let's go look. We can also look at individual assets. So if I want to see, hey, just show me Binance, BTC, USDT, here it is. The open interest here, a 1 minute resolution chart that auto updates, and it's actually a really pretty chart, really good looking chart. Like, wow. This one is it's a cool chart. Only issue is this doesn't really show me a line of open interest, but you may say, well, hey, Bennett, where do I get that beautiful black line of consolidated open interest over time that shows me total open interest from everywhere? Well, funny you asked, because now you are about to get it. What you're looking at here is total open interest across every exchange and every Bitcoin asset. What I was showing you guys before was just the Binance futures and really that open interest, but in total, there's $4.272 billion worth of longs and shorts on Bitcoin. Now, what we can see here is the dips and peaks all over. I can see here that there was a large dip around December 27th, as you can see around there. What happened December 27th, you may ask? Why did open interest decrease so much, and what should we have done? Well, you should probably reversal trade whatever happened December 27th. I'll tell you that. December 27th was here, yeah. Price goes below the low, and open interest decreases. This is the maximum point of opportunity to buy against the trend when open interest had decreased so much and become one of the first buyers. Look at that beauty. I mean, 6% is not a beautiful thing. It's not like a lot, but if that's 10x leverage, that's 60% ROI. So, I mean, ROE would be more better there. 526 products. We can see the total spot traded volume. I can also see the total 24-hour traded volume in derivative platforms is $30 billion. So this is not, your everyday, farmer's market. This is a international, global, same word, but international traded instrument. Okay? This is something that we can look at, and it's updated every 5 minutes. Now, if you want to go a little bit more near term, hit the 3 hour, and you can see this updates every 5 minutes. Beautiful. And we can see decreases in open interest, like what had just occurred at around 17 o'clock to 17:05. We had a decrease in $15 million at 17:05. Let's go look at what had happened there at 17:05. I am very curious. What happened at 17 to 17:05? So around here, open interest just began to decrease, probably because price went below the low, stopped out some longs, and potentially liquidated any longs who had bought the top. There. Makes sense. But what I really love to see is a large decrease in open interest. I don't want these 15 mil. I want to see a much larger decrease, at least 20 million. Do I get a 20 million here? No, 11 million. 11 million's, fine, but it's not like something that's going to be very, very important. So this is one way that you can trade directly using open interest data, consolidated open interest data. You can look for large decreases in open interest and look to take the opposite side of the trade. Now, what actually fascinates me more, guys and girls and bots, is not Bitcoin open interest, because you can get that anywhere. You can't get that consolidated open interest anywhere. But you can really get something similar everywhere. It's altcoins. Guys, look at this. I want to see, hey, Ripple. Now, this is really cool. Guys, of every single derivatives platform, I'm looking at the total open interest of XRP. I mean, this data is what will be used by, hedge funds, banks. Anyone who can get their hands on this data would be gleeful. Look at this. Maybe I'm just, a hopeless obsessive, but this is really cool. You can see a large increase of, we had $1 million added in derivatives on XRP from 1645 to 1650. So what that can tell me is, you may say, well, what does a large increase in open interest mean? How can we trade with that? 2 ways. One, that can signify that a large amount of traders or a large trader by themselves is giving confidence to the prevailing trend, meaning the trend will probably continue. Okay. So if we look at XRP USD, let's look at the Tether. Binance, yeah. So when did that occur? 16, I think it became 45 to 50. Oh, that's interesting. So right here is when we had a large increase in open interest. So this downtrend began with a large increase in open interest. That's probably because a large short had shorted. Now we can look at other points in time, other beautiful, beautiful points in time where we saw a large decrease in open interest, such as this is only $500,000 from 1610 to 1615. It's something to write home about, but it's something. This could have been a time to reversal trade. Not great, but could have been a time to reversal trade because of a large decrease in open interest. But I did say that there are two ways to trade increases in open interest. And I didn't forget the second way. First way is it gives confidence to whatever price move that occurred. If price goes down and we see an increase in open interest, that's quite bearish. If I see an increase in price and increase in open interest, that's quite bullish. A large increase in open interest can show you where traders may be trapped in the future. Let that settle in, because it's a little bit more complex. I'll tell you that. That's why I'm whispering it. When you see a large increase in open interest, we know that there are a lot of longs and a lot of shorts adding positions at those prices that were transacted at. Now, if price leaves those prices, one of those sides, either longs or shorts, will be trapped. They're holding unprofitable positions. What that means is, such as we saw a large increase in open interest here. Remember that, guys? If price goes back up to here, that could probably act as resistance because of how many longs had bought at the top. There are so many cool things that you can do with this platform. I'm not even going to be able to cover, every single thing that you can do with this. This site is a beauty. I am so thankful to whoever had put this site out for free. You are a godsend. This data is really, I've never even looked at regulated Bitcoin derivatives. I've never looked at this open interest before. Oh, geez, what happened here? Oh, it just takes you to total Bitcoin derivatives. Yeah, that makes sense. Okay. It just takes you the total, which is, I think, unregulated plus regulated, which makes sense. Yeah, this data is really, really cool. I mean, even if someone was like, hey, what's the open interest data on Ledger X? I want to know. Look at that. I can't even tell you guys, just like, oh my God, it's so beautiful. It's so beautiful. That is weird open interest. Oh, it's like 0.05 million? Ugh, that's nothing. Okay, 0.05 million is like, what, 50K? Okay. That's not a lot. Ledger X, you gotta work a little bit harder there. How about Backed? What does Backed have? Nothing, or yeah, I don't know. They don't really have any open interest here. What lovely open interest out of there. So you can use this in whatever way you want. To talk about the three ways that I talked for trading, you can use this on Bitcoin, on any other altcoin, or you can use a consolidated Bitcoin if you want. Three things. One, large decrease in open interest tends to lead to a reversal, allowing you to become one of the first reversal traders and not one of the traders who get stuck trying to trade against the trend. Two, large increase in open interest can signify a strength of that trend. If you see a large down move with an increase in open interest, price will probably keep going lower. Now, third, when you see a large increase in open interest, that means that a lot of longs and shorts had open positions around those prices. Now, when price goes back up to those prices, those trapped longs or trapped shorts may be more inclined to exit at break even, allowing that to become support or resistance in the future. With that, find your own strategies, utilize your own ways of trading. This is a beauty for me. If it's not a beauty for you, that's fine. But happy trading, and I'll probably be covering this in the future. Bye-bye.